Okay, folks, it is Friday. The market is closed, and we're going to be talking about where money will be flowing in the next couple of weeks. We saw a little bit of a stalling out in the equity markets today, being Friday, and we'll be talking about the health of the overall market, the quality of the close, and what we're going to be doing this coming trading week with members on the week ahead commentary that will be going out to members tomorrow, being Saturday, as we strategize for the new trading week. If you're not currently a member, sign up, 14-day free trial offer. So what we're going to be talking about today are, at a minimum, 5 stocks that I've picked up as being very, very interesting as potential sector rotation trades. What does that mean? Well, we know that we have the triple Q names that have been rallying, S&P 500 rallying, new all-time record highs, Dow Jones rallying, but what has not yet begun to rally? So we could expect that money will begin to segue into those names as the money begins to dry up in the most favored names and looks for a new home. So we want to begin looking now before they've run. So how do we qualify those names that are going to be the next to run? Well, we take a look at the weekly charts and we screen by using a Bollinger Band squeeze setup. So what you're looking at here, we're using TrendSpider, and I screened for a Bollinger Band squeeze. What does that mean? What it means is that we have the Bollinger Bands in red trading inside the Keltner channels. So what does that mean? It means that you have energy that is very, very concentrated. You have a tug of war going on between bulls and bears. Somebody's going to win. And our argument with these trades is that it's going to be bulls that are going to win. Why? Because the path of least resistance on these names is to either A, flat, or B, moving up higher. And when I say flat, that means that they've come out of a bear market, bottomed out for several months, and now they're getting ready to move up. So the sellers are gone. We hope. That's the play. So I ran a screen, and I've been particularly focused the past 2 days on biotechs. For one reason was, we'll come back to this in a moment. I already wrote these down. I was watching LABU. LABU is a leveraged product in the biotech space, and you could see nice bullish reversal week. This is a weekly chart. Money moved into the biotechs this week. Then last night, in our forum, Lawrence posted a request for me to take a look at PATH. Okay, so we did, and I happen to love the chart. Then later on today, I get an inquiry from one of our fellow members, Larry, and he goes, listen, I want you to take a look at VERV. I took a look at it, and I liked it. Another biotech play. So LABU looking good, PATH looking good, VERV looking good. Okay, we have something here. We have a bit of a consensus building that we may get money flow moving into the biotech names. So let's talk about it. And first talk about why we chose these particular stocks, because we have plenty of biotech stocks out there that we could buy, but most of them are junk. The charts may look halfway decent. They may look like they have a Bollinger Band squeeze, but net, they're junk. We want to buy as best of breed as possible. So what we're doing is we're looking at Investors Business Daily. Harmony Biosciences, that's one we're going to be looking at today. Great fundamentals and setting up for a potential Bollinger Band squeeze. So let's get to it. Since we're talking about Harmony, before we even talk about the chart of Harmony, let's talk about our week. We booked profits this week on gold. We opened up a new trade on silver. We opened up a new trade on Wendy's, longed on Wendy's, and we're up on that right now. Our option selling business did pretty good. We did get a little bit spanked on corn, but I made a mistake there when I opened up that trade, and I'm going to actually do a video on that so that way it doesn't get repeated. Sometimes they tell you, like with Tasty trade, they say ignore the charts. In this case, I normally rarely ignore the charts. In this case, I did, and I paid the price. So more to come on that in the future. As long as you can learn your lesson from a trade, if you take a loss, all right, you're going to learn your lesson from your losses. So we won't repeat that mistake, at least intentionally. So let's talk about Harmony Biosciences. And let's bring up TrendSpider. Let's clean this all up. Okay, so we start with a clean slate. Okay, so we know that the biotechs had a good week, but it wasn't a breakout week. At best, we're in a downtrend. At best, we're at the apex of a descending wedge formation, descending triangle formation. Call it what you want, it doesn't matter. We're in a very, very tight trading range, and it's getting tighter. It will get resolved one way or the other, either up or down. My bet is it's going to get resolved up. So that's the qualifier for the sector. Now let's take a look at some of the names that are out there that are looking interesting. And we only want best of breed in these breakout trades, because if you're trading best of breed, what that means is that your probability, if you're getting long, of being right increases versus a stock that has poor fundamentals. Simple. It's very simple, very basic. And here is Harmony. And before we bring up the indicators, I want to talk about what this chart is telling us. What this chart is telling us is that we have an inverted head and shoulders setup. Left shoulder, head, right shoulder, and guess what? We've already broken out. We did so last week, not this past week, but the prior week. This past week, we were down off the highs of the week. I would call this a retest of the breakout point. So what I'm very interested in here is this. Forget about RSI. Let's get rid of this. I'm interested in, as I mentioned earlier, what the weekly chart is telling us. What it's telling us is that we've had a long-term consolidation, and we have a Bollinger Band squeeze, which is now beginning to widen out, and the path of least resistance is becoming to the upside. So we know that we have, on a weekly time frame, a good high-quality stock that is beginning to show signs of life and beginning to break out after a very long, over a 2-year period of consolidation. Now, when we take a look at the daily chart, we want to see, okay, is it time to buy this stock? And we're very, very close. So what I'm going to be doing is putting in the members area our entry points, price targets, and stop loss points for all the charts I'm going to be going over today. Now, I would like to see a further retrace here. We may not get it. Why? It's because buyers moved in at the support level at 36.41. So I'll enter our entry point. We're probably going to be trading long of HRMY as soon as this coming week. So I will be sending out alerts to members when we do execute on the trade. Now, the next chart I want to talk about, this was one that was mentioned by one of our fellow members, Larry, and this is VERV. I don't know what the fundamentals are for this name. And as you can see, they're for a biotech name, they're not bad. They're making money. Their sales change is 120%. Their 3-year sales growth rate is almost 400%. Well, the PE ratio is 0. So that means they're not making money. But their earnings are increasing. The sector, as was the case with Harmony, is under accumulation. So institutions are doing some stealth accumulation here. Now we take a look at the chart. Now, before I leave HRMY, I just want to bring up one other thing. We're using TrendSpider, which has automated technical analysis, meaning it draws on AI to indicate where you'll have support and or resistance. So we click a button here, and you can see we have a ton of overhead supply beginning at 42.94 on HRMY. That will play into our position sizing, so members, more to come with HRMY. We'll talk about it more on the week ahead commentary. Now, VERV, let's get rid of all this, clean it all up. Go back to the weekly chart. I don't want to be biased by the daily chart. I always want to begin bare minimum on a weekly chart. And the weekly chart here is screaming buy. Screaming. At least on a weekly chart. Daily chart may be extended. I'm talking about a weekly chart. Let's not get ahead of ourselves. So on a weekly time frame, you can see that this chart has been in a downtrend for quite a while. It broke out here the week of December the 2nd, consolidated for a few weeks, and now this past week has broken out. Bullish. Very, very tight consolidation. Bollinger Band squeeze, setting up very, very sexy stuff. Let's talk resistance levels. So the automated trend lines are validating that where we saw a breakout using our manual resistance level was accurate, and it is breaking out very, very handsomely because it did it on volume. It's 15 is resistance, so we have a lot of room between where we're trading now and resistance. So this is a very attractive trade to me moving into next week. Now let's take a look at a daily chart. Let's take the trend lines off so we're not influenced. Daily view. Now this, I don't want to see the trend lines on a daily time frame. I'm not buying this stock on Monday. I can tell you that right now. Unless, of course, we pull back to a support level. What might that support level be? Well, the automated trend lines are saying, A, we hit resistance for the second time this week at resistance at $8.16. I need to see it pull back to one of these two support levels for me to get interested in the shares. And in fact, I would argue that an even better entry point would be right down around here where there was resistance here should now be support. So members, I'm going to be putting, again, stop loss points, entry points, and price targets in on VERV in the members area. Go check it out. And if you're not currently a member of the Contrarian Trader, for the silver and gold level memberships, I give TrendSpider away free. And if you're not ready to join, that's fine. Just watch the videos on YouTube until you're ready. I get you a bare minimum 35% discount code on TrendSpider. Use the link below if you're watching this on YouTube. Link above on Twitter. Take advantage of it. Moving on to our next chart. Let's stick with the biotech plays here. And the next one is PATH, P-E-T-H. Let's get the trend lines off. We don't want to get influenced. Now, I did discuss this one last night, so that's why you have a resistance level up here. We did that live, and sure enough, we had a very good week. We were bullish on it last night. I remain bullish on it. In addition to observations from last night, we have higher lows, and we have a breakout on a weekly time frame. Taking a look at automated trend lines, they're not showing resistance above. However, that is inaccurate. Why? Because right there, we have resistance. We hit it this week, and we paused. So that's going to factor into when we want to get long of this stock. Also to be noted here is that up volume on last week's recapture of support and this week's breakout came on sequentially declining up volume. Ideally, you're getting breakouts on higher, above average volume. We're not getting that here. Daily chart. Now, in a daily chart, they gapped it up. You can see shorts probably squeezed this right up and into the upper band of resistance, folks. To buy this right now, it would be a fool's errand. You want to either wait for A, a pullback to support, or B, a breakout above this resistance level, or a mixture of both. You buy a little bit on the pullback, buy more on the breakout. So while I like the chart, I like the setup, it's not a screaming buy right here, right now. Could I be long of this next week? Oh, no doubt about it. But the price has to prove itself. It's got to come to us. It's got to show itself worthy of our investment dollar. So again, hate to repeat this, members, we'll talk about it more on the week ahead commentary coming out on Saturday. And also, I'll put the entry point, stop loss point, and price target into the members area. Now, another name I thought that was interesting is ADUS. This is a home care play. And this one is making money. The however is that nobody wants it. It's not under, actually, it's begun to become under accumulation. It's got a D plus ranking, which is not great. The however is green, means that it's beginning to move up higher. The group strength is pretty strong. EPS rating, strong, so it's making money. It's a good, high-quality stock that nobody wants. That's why, as contrarians, we're not looking to go chase the high-flying stock of the day. We're looking for the Bollinger Band squeeze. Nobody's watching it. Probably got high short interest trade that everybody's going to want in after we get in. So let's talk about this chart here. Let's take the influencers off. Plain chart, and we build on intuition. ADUS. Okay. So on the week, we want to begin with a weekly chart always, if not a monthly chart. So on the week, the shares were down relative to last week's close. Now, let's go to a monthly chart because I think this is worthy of conversation. Now, this chart is very powerful. You're in a monthly uptrend. We went into a consolidation from January of last year to May of this year. And now we have a continuation move. So what we're looking for on a monthly time frame on this high quality name is a continuation breakout out of this bull flag setup. Now, going into a weekly chart, we know that we're in a long-term uptrend. The question is, with the Bollinger Band squeeze, does it get resolved to the upside? I think we do, because the path of least resistance is to the upside. And we are trading above the moving averages. The moving averages are what you call stacked. You have the shorter duration moving averages trading above the longer duration moving averages. So the odds favor bulls here, even though we closed down on the week. So this is one that is clearly on our watch list. We have a weekly Bollinger Band squeeze. We have a breakout on a weekly time frame. We did a retest on a weekly time frame. We rallied off the lows. All down weeks are not made equal. While some people may look at this and say, the stock was down this week, I'm not interested in it, I don't care. I see a stock that had broken out last week, pulled back this week, and then rallied off the lows of the week. Daily view. Now today, after a brutal back-to-back two-day downward session, today being Friday, we gapped up, inside bar, no follow through to the downside. What do? Take our crayon out. Draw our trend lines And there is the lower band of support. That's where we bounced off of. Again, another stock looking very, very strong in a sector where money flow is beginning to move in. Remember, accumulation distribution, it's under accumulation now, even though it's not being accumulated on heavy volume. It's clear that we're beginning to move up higher. Money is moving into the stock. We want to get into it before the rest of Wall Street gets into it. And again, we'll be talking about it more tomorrow on the week ahead commentary. Price targets, entry points, stop loss points in the members area. And we're going to wrap it up with DCO. DCO, good fundamentals. This is not a biotech name. Great fundamentals here. EPS growth, 41%. The three-year EPS growth could be better, but the current year we're moving up 192%. Management owns a good portion of the company. Always want to see that. They report earnings on the 20th. Be forewarned about that, 20th of February. So great fundamentals. It's under accumulation. Now we look at the chart. Again, we want to go to the weekly chart. Let's not get influenced by our drawings. Okay, so here we have Dukomun Incorporated. All right, so here's our weekly chart. Clearly, the path of least resistance is to the upside. Do we have a Bollinger Band squeeze? The answer is yes, and we have begun to break out. Now, one concern here is that volume has been very, very light. I would like to see stronger volume. Now, the automated trend lines show no resistance above. However, there is resistance above, right around $70.28. So would I buy the shares right here, right now? The answer is probably no, but I want to take a look at the daily chart. Here you have it. And the answer is definitely no, because we want to see a breakout above this upper band of resistance and or a pullback to a support level, as noted by the automated trend lines, down at around $66 a share. Now, we may not get that. We may get a breakout. And I don't think we are going to pull back that far. That's why we're going to be probably doing a momentum breakout trade here, meaning that's if we break out above resistance, we get a retest of support, and we will look to put a long trade on. And again, folks, we'll be talking about this on the week ahead commentary, as well as entering our price targets, stop loss points, and entry points in the members area. And that's it, folks. Don't forget, take advantage of our 14-day free trial offer. Get TrendSpider for free. Get my trade alerts and my contrarian commentary. If you're not ready yet, that's cool. Just like, subscribe. You know the deal. Check out my content. Maybe one day you'll be ready. Take advantage of the discount, though, on TrendSpider. Get a bare minimum of 35% off. Use my link below on YouTube, link above on Twitter. Have an awesome weekend and a profitable trading week next week. Talk to you soon. Be well.